When you started working on this problem, maybe you already had your own hypothesis that this is going to pan out this way. And so how has that changed after spending, let's say, last few years? What are like some things which surprised you, or something which were positive or negative, both?
Yeah, so as I said, right, so I very frankly didn't have much of hypothesis before I started actually traveling with Amit or looking at this segment. But my first surprise was actually I didn't know this Bharat existed, right? I didn't know that there are still banks who are still physically, customers have to go to the branch. I mean, when was the last time you went to the branch? When was the last time you said, okay, for a balance check, I have to go to the branch, talk to a person to check my balance, right? Or do a fund transfer or whatever, right? So I had to forgotten about all of that. And now even we don't go to an ATM to withdraw cash with the UPI and all
Right.
that. So first was that eye-opening, okay, this is... And then as we traveled the length and the breadth of the country, we saw that it's not a small problem. It's actually a big problem. Or an opportunity, as they say, right? It's a big opportunity to actually work in a way like what Aadhaar did or a lot of these things did for us. We can do the same impact for the tier 2, tier 3 and rural India, where we can digitize them, get them into formal economy and bridge a lot of that gap which we have. I mean, a lot of reports talk about a credit gap of almost from 650 billion to 2 trillion, which currently India needs to fulfill to get their MSME and SME sector to get to a 10 trillion or a beyond economy. Now, that gap exists because a lot of formal credit information is not available for half of Indian population. Now, we believe if you can digitize cooperative banks, a majority of that problem will get solved.
And when you compare cooperative banks to private banks or public sector banks, what are some of the fundamental differences? From a structure point of view, maybe their objectives are also different. And shareholders, I mean, the structure is like totally different, right? Versus private banks.
So the biggest difference is the basic. A private sector bank or a public sector bank basically have a shareholding, where a public or private individuals basically own those shares, right?
Right.
And in a cooperative way of living is every customer is a member of the bank also. So in that sense, a shareholder in a bank. So his interest is also to keep the bank going, and he gets a share of the profits of the bank, right? So that's one way, and plus it's a community-led bank. So everyone pools in and then gives money to whosoever is required, and then gives money. That's the basic level of difference.
So the initial paid up capital comes from the members. Okay.
And not initial, every time.
Every time.
Yeah. So they cannot raise capital from anywhere else.
Okay.
Right. So they are not they cannot go to public market and list themselves. They have to convert. A cooperative bank can convert into a small finance bank and then get listed, but then it's no more a cooperative bank.
So not even government can infuse capital into
No.
that. Okay.
No, except for state cooperatives, which I described the structure, which is state driven. But other than that, the UCBs, the urban cooperative banks, is a cooperative bank. But they can borrow money.
Okay.
Right? They can borrow money to give loans and then pay back. And they can invest also. So that's the basic level of difference. Then the second difference is a scheduled commercial bank have a lower private sector lending targets. Cooperative banks are required to have 65% of their lending has to be in PSL segment, which is priority sector lending.
So priority sector will include what? Agriculture,
EV now, for example, a lot of other things, infrastructure development and all of that kind of things.
That's 65% of their loan book should be in private
sector lending. Okay. So FPOs like farmer produce organizations which actually give fertilizers and all of those kind of products to farmers is one of the key projects which is there.
What do you think about FPOs? You think they have been successful in India?
So
Because I'll tell you why I'm asking this question. So probably about a year back, 2 years back, we published a report called India Growth Story. And when we were writing, I looked for success stories of FPOs in India. So I found couple of maybe in Tamil Nadu there is one run by I think Isha Foundation or some other case studies which I could find, but there were very limited data which I could find on FPOs.
Same thing, right? Majority of the FPOs today also work with cooperative, and they are typically run by individuals. There are very few organized FPOs, except I think I'm not sure, but I think Amul has one for their farmers and so on and so forth. But typically it's run by individuals within a cooperative. Whatever we saw, I have not seen any data on FPO. I have not researched as well. But whenever we go to cooperatives, especially in Maharashtra belt, Gujarat belt, or UP belt for that matter, a lot of their funding, a lot of their lending actually goes to FPO.
Okay.
And I have seen a very vibrant FPO system. For example, in Maharashtra, it is very vibrant. Every small town will have one or two, which typically the whole district farmers will come and buy their produce. And they typically have a bank account in a cooperative bank, and cooperative banks will have a very big, lending as well as deposits from these FPOs.
Right.
But this is all in my travels, during my travels, what I've seen. I have not seen any data around that.
So when it comes to priority sector lending, all banks have a mandate, right?
All banks have a mandate. Like small finance banks also have a mandate where they also have 65-70% of their lending has to go to PSL. Cooperative banks also have that. So they used to have 60%, now it's 65%, and it will increase as they move forward. So that's number. So structure is different. Lending books is different. The third biggest point is RBI also now wants them to get into technology. So from the stage where they are in terms of technology implementation, as I said, they are almost 15 years, 20 years behind. So RBI now wants to get them at par with some of the new age banks are, right?
And they are lending at the same rate.
What does that mean?
So cooperatives are lending at the same rate at the PSU for when it comes to priority sector.
More than that, right? So from a percentage of books, more than that, but quantum obviously is less, right? Because the exposure is less. So that's one major difference. But from a management perspective, same. So they also have a board. They also have a CEO and the leadership team, and then they also have branches. So pretty much the same way like a normal bank functions, they function. Obviously, the other piece is geographical thing. So if a cooperative bank has to function within a certain geography, typically within a state, typically within a district.
Right.
If they have to become multi-state, they have to take an approval. So multi-state cooperative banks need to go from a single state to multi-state. You have to take an approval.
Okay.
Right. While a SFB or a commercial bank can open anywhere, a cooperative bank cannot go out of their location.
Okay.
Regional location.
So what my question was, just to clarify, that when they are lending, the interest rate for cooperative banks is similar to PSUs, largely speaking, for priority sector.
So from a interest rate point of view, it depends. So from a farmer perspective, agriculture perspective, yes.
Okay.
It can be equal or better. For some of the things, because see, for a urban cooperative bank, it's a members, right? And typically members decide. They don't go exorbitant also because it's ultimately members, but they also don't go very low also, right? But it's a very nice line where they provide lending. Typically their lending rates are higher because their cost of capital is higher. Right. Because their FD rates, for them to get deposit, they have to give more better interest rates than a public sector unit bank or a private sector unit bank. So that's why their lending rates also a bit higher. But the fact is that for a cooperative bank, because he's there in that place and location for ages, his lending decisions are better.
Right. I think for members also probably because there is a opportunity cost, right? Because they are giving the capital as members to their bank. So obviously the lending rate has to be.
So for whatever we have seen, Kulmani, typically members prefer to take a loan from his cooperative bank if he's in the community bank, because he's given capital and all of that. Plus he has the relationship of that bank. But what has also now with fintechs coming in, and the ease of loan which is now happened, right? All the fintechs now are saying, okay, pre-approved loan of so much rupees. As soon as you open any app today, you have that.
Even Paytm shows me every day.
Every day you have a pre-approved loan of so much rupees, right? And that is where the game is going. Where obviously for corporate, if you have to go and apply for a loan of cooperative, it's still a physical process, right? So we were at an event and somebody told us that today to take a loan from the application to getting the loan is about a 3-month process. Okay. And RBI wants to make it in a day. Even KCC, the idea is to give it in 6 minutes, right? How will that happen? Is only can happen through digitization, right? I should have with AA framework, I should have all the records pulled in.
Right.
I should have your land record, I should have your crop records, I should have your credit score. All of that kind of should just work like magic and you should be able to get loan. So that's where the technology is heading. And that's where cooperative banks, even not cooperative banks, right? Even the private and public sector banks have to catch up to that.
I think KCCs can still take like few weeks time. I don't think it's happening.
No, it's not happening. That's what I'm saying. Because it's not happening. Why? Because the land records are not digitized as yet.
Right.
So if I don't know which land you have and I don't have that clarity, how will I underwrite a loan on your land?
Some states have done a good job. I think Gujarat has done the digitization complete. I'm not sure if that's...
I'm not also sure, but there are about 5 states whose land records are digitized. And over there, a lot of this can happen.
I think otherwise, when it comes to disbursement for personal loan with new private sector banks, it's like hardly 60 seconds, 1 minute, something like that.
Yeah, but I think it will take. But that's unsecured loan.
Unsecured, yes.
And we all know where unsecured, with micro lending getting into trouble right now with banking sector where we are. So there's a lot of work which needs to happen. I mean, also coming from not just cooperatives, right? Even as a banking, if you look at our banking sector today, right? I mean, RBI is talking very openly about this, that the UPI, the 85% share of UPI is with fintechs, PhonePe, Google Pay and Paytms, right? Banks have very less amount of share. With all the digitization happening, banks per se as a banking sector, the back end of the banks, the core banking is still very old, even for the bigger banks, right?
Correct.
We had cases where RBI banned Kotak for not taking any digital onboarding. Why was that? It was because the core banking and all of that is old, right? So even as a banking sector, from a tech perspective, why are they lagging behind fintechs? Is because of the tech needs to get evolved. The tech is still very old, very rigid, right? The integrations take years, not only months. So while fintechs today do integration within weeks, right? So that also is very ripe for transformation. It needs to get modernized. It needs to get, the tech needs to get upgraded even for bigger banks. So if they have to compete with fintech, right? The pace of fintech as well as the technology which a fintech comes in play, banks are lagging behind big time. So even that particular segment, it's not like they are at a great place in that sense, right? They are losing ground from fintech.
And I saw yesterday some news that there is GST on UPI and some people were debating around MDR on UPI. I don't know if about 2,000 rupees.
Yes. So the story over there is, so UPI obviously came in 2016, right?
Right.
And government made it free for everyone. So you and me don't pay anything. Like if you use a credit card, you pay a 1%. Not you, but the merchant pays 1% of the collected amount. Or if you pay by debit card, merchant pays 0.25% of the amount, right? UPI is completely free. So if you pay 100 rupees, merchant also gets 100 rupees. There is no money. But to maintain this whole technology, there's a cost, right? Which currently all the fintechs and NPCI and everyone is kind of taking, right? Banks are taking. So government, basically the fintechs and the banks are going to the government saying, this is zero revenue pool for us. Can we start doing some kind of MDR on UPI as well? Right? Now, UPI has grown how it has grown because it's been free, right? The merchants have no issue taking it and all of that. So what the debate which is going on is, how can you put a revenue model on UPI without disrupting the growth of UPI? So the current thing which is in news is, which government and a lot of people are proposing, is that can we start putting in MDR on transactions above 2,000 rupees? Because they want to exclude the small ticket item. And the second thing they are trying to say is, we will only charge for merchants who are above a certain threshold of revenue. So it will only go for bigger merchants and not for smaller merchants, so that the smaller merchant remains conducive to still taking UPI.
And what do you think will be the second order effect of this if this comes into play?
So one is, a lot of us fintechs will become profitable. It's a big pool. Because see, the numbers are public that it takes about 10,000 odd crores to maintain all of this.
So we are talking about basically the Bhim infra which is in the background, right?
No, not only UPI, right? Bank also incur a cost.
Oh, right.
So what happens is, when a UPI, you transfer money from HDFC Bank to an SBI, HDFC Bank actually pays a switching fee for that transaction.
Right.
Similarly, SBI pays a switching fee to this transaction. Similarly, there's a cost of, if you have done it through Google Pay, then Google Pay also have a cost of building and maintaining that infra, right? And then NPCI obviously has the whole rails to maintain.
NPCI shareholders are banks only, right?
Banks, primarily banks and government. So that's all obviously there, right? So a lot of people say that we need to have at least 0.25 to 0.3% as the MDR on overall UPI to make it, to recover the cost which basically we are incurring right now.
So the second order effect could be that large merchants still, let's say if you as a person, if you go make a purchase, let's say in one of the markets in Delhi, a lot of time they will say, I will not take credit card payment. Or I will, some people even like, let's say...
I don't think it will have that much of an impact, personally speaking. Why? Because credit card is still 1%, right? Even if this is 0.25%, it's hardly anything. That's almost his CMS charges.
Right.
So if a big merchant is there, he will anyways have a cash management charge which he will be paying to the bank for collection of cash, right?
Right.
And that collection of cash typically is in that range. So for a big merchant, it's equal to cash.
Fair enough. But do you think this is real? This is going to happen?
So there's a lot of this thing, and so there are both sides, right? I believe it will happen next 1 or 2 years, because at the end of the day, it has to become self-sustaining. Right? It's something like we faced in Bharat Petroleum. I used to work for Bharat Petroleum, and we were the child of deregularization. So before us, the government used to tell us what price to give.
Right.
And then they gave us a formula and you decide. So based on international crude prices, they gave us a formula on which I can decide the pricing in this country. And then the oil started going to $100 and all of that. And then the government used to come and said, okay, don't increase prices like this. This is the amount of subsidy I will give you, whatever is required. So if I need to increase the price by 1 rupee, government will say 1 rupee into the oil you will sell.
Only for the retail buyers though.
Only for retail buyers. So I will give the subsidy. But after a point in time, it became such a big exchequer issue that they said, okay, now we have to completely deregularize it. And it has to become self-sustaining. So that's the same way I think UPI somewhere will have to go. It will start by 2,000 rupees plus and bigger merchants, and then it will start percolating down, because government will see how is the effect. Is it leading to any deduction?
And I think if we apply 2,000 rupees threshold, then it will be more or less like a 80-20 split, right? Large percentages below 2000. I'm not sure. I haven't checked the numbers.
I also don't know, but average is about 9. Average UPI ticket size is, I think, around 1,000.
Okay.
So I'm guessing it might not be big. But I have not seen the cut where large merchants and transaction above 2,000 will be how much percentage.
Right. But your core customers are still disconnected from the UPI world, right?
Yeah, so like today we have 200 banks, we have lakhs of customers currently now using UPI, right? Over there, our average is about 800 rupees, and the above 2000 will be very less in our case. So more should not have.
And what is the reason, do you think, these banks or cooperative banks did not have access to what you're trying to provide?
Same thing, because they didn't have the right backend. They didn't have the security protocols, and they didn't have a tech player who could give them that thing, right? Because if you want to get connected to NPCI, you need to have all those protocols in place.
Correct.
And you have to have a right amount of technology in play from a core banking perspective as well.
And besides, if we just zoom out and think about what is the role of these banks in the lives of people or members they are serving, whether it's society or cooperative, basis your travel, what do you understand? What is the connection and what is the role they are playing?
So as I said, right, I have been to places where there's only one cooperative bank for let's say a small town. A small town has 2 markets and the cooperative bank has 2 branches.
Right.
And typically it's a very, if you good old days, right? The bank staff needs all their customers and know all their customers personally. Customers know their bank staff name, who works where, who's cashier, who's teller, who's manager, everything, right? And I have seen people going and saying, "Arey, iske saath to I play football with him in the evening, or I play cricket with him." So that's the kind of, it's a very small world in their sense. Everyone knows everyone. And for customers, they are the first bank. They are the first protocol for any financial decision. Let me put it that way. So if they have some marriage coming in the house, what they should do? Should I break my FDs or should I take a loan? Right? If there is a bumper crop, I have got some amount of money, what should I do? So all the financial decisions of the family, of the person, he will first go to the bank and ask the branch manager or the CEO or whomsoever he knows, right? So that's basically his whole financial needs get catered by the cooperative bank. It's as pure and simple. So, for example, one of our cooperative banks launched an insurance product, right? Simple. So he took, I will insure your life. Now, for everything from form filling, first making them understand what is this, to form filling, any claim comes, claim didn't approve or whatever, right? Everything was through them. So they are the first port of call for any financial decision for this public.
So in that way, their role is critical.
Very, very critical. I mean, they have survived 150 years for a reason, right?
Right.
With all the migration. So, I mean, okay, I'm going to the city for work, right? So, which bank should I open an account over there? How will I transfer money from here? To an extent, I'll tell you a very interesting story, in fact. So, we were at a bank and I was talking to a manager and he said, you know what? I keep some cash in my house. I said, why would you keep cash in your house? He said, because what happens is if late night there is an emergency, they come to my house. I have this emergency, there's something happened, I have to take him for some hospital or whatever. Do you give me cash? So I give them cash in the night and make an entry in the morning.
Wow.
That is the rule.
Interesting. And for the new generation, probably they won't realize that some of the new private banks are only like 25, 30 years old.
Yeah.
Even SDFC, ICICI, all these came in
all in 2000s.
90s, late 90s, 2000s. So that's also, if you think in terms of time frame, it gives you perspective, like
Yes.
how important role they have played.
Yeah. So private sector banking came in this country about 25 years ago.
Yeah.
And cooperatives been there 150 years now. I mean, 1890s was cooperative.
Yeah. I do remember like debit cards and all around our families. Around 2003, 2005 is
Yeah,
when actually people started getting debit cards,
Absolutely.
etc.
Absolutely.
Before that, it was only checks and withdrawal forms. I remember filling withdrawal forms. And
Yeah. So if you go to a cooperative bank, there are still withdrawal forms. There are still those. So the FD has a separate slip. The saving account has a separate slip. Current account has a separate slip.
Yeah.
Loans also, a car loan has a separate slip, and all of those kind of things.
Yeah, interesting. So one of the themes which has been which is emerging from the conversation is that these banks have been very slow to adopt to technology for whatever number of reasons. So when you go and speak to them, let's say you go meet a branch manager or a CEO of a state cooperative bank and you pitch them your product and you show them the picture, right? How is their response?
So it's just, let me just take a step back, right?
Mm-hmm.
So let's see where we are, right? Let's see the playground. For them, the playground is a local town, right? They typically know everyone. They know the customer. Customer comes to the branch and everything, right? Now, why would they take up technology when they see ROI, right? These are bankers. They will first want a return on investment on any kind of investment they will make, right? It not only to their customer, they will also apply the same to themselves.
Correct.
So when they saw the CBS coming in, all the banks who had 4, 5, 6, 10 branches, they actually went ahead and adopted it. Nobody kind of forced them, right? Now, with whatever form factor they adopted, is within whatever was within their exposure, right? And all of that. So all of these cooperative banks have a CBS. Then basically came the whole UPI wave, and then now came the digital wave. So these guys will take technology when the customer will ask for technology, right? Like any other businessman, right? I will invest if my customer is ready to pay for it, or I see an impact on my business because of it. So it's a simple, like every technology starts from a Western world somewhere, then came to top 1% of Indians, then went to 10%, then went to next 20% and so on.
That adoption curve, early adopters.
Exactly, early adopters and all of that, right? So they have a back-end system, but they didn't have a front-end system. UPI, when the start happened, UPI wave happened, Aadhaar happened and all of that, they realized that now the customer also wants the front-end system.
This will be 2016, 15, 16.
Post 2016 and somewhere, right? Third thing which happened was that a lot of fintechs started reaching their customers. So the competition was not from another cooperative bank, which was typically not there because you had your own community or town or whatever. The competition actually came from the new fintechs who started reaching to his customer, and the customer said, "Ha, yaar, matlab, I can, on a Paytm wallet, I can see my balance, I can do my fund transfers, I can pay my bills, right? And I can do much more e-commerce and all of that. While you are not providing me that service." So part of merchants' collection started going to that checking account or the Paytm wallet or whatever, so on and so forth. This is must have.